So what do accountants look at? Numbers and what does logically make sense. Real estate logically makes sense. I'll give you an inside scoop on the tax and accounting industry, specifically when it comes for planning for people in real estate. I've heard accountants say this. I can make X amount of money during tax season and not work the rest of the year.
What lie do real estate investors often tell themselves?
I'd say sometimes people purchase an asset because they really are in love with the idea or the area or the property itself, and the purchase is emotional, where they have kind of rosy expectations as to how much revenue they'll receive from it. I'm sure you hear it all the time on your podcast and friends or other investors. I should have taken out more loans against my property when interest rates were lower. I'd say that's my number one biggest mistake.
George Dimov joins me here today. You can learn what his team is up to and how they can help you with your taxes. movtax.com. That's going to be a clickable link in the show notes. Really appreciate your time here today, George.
It's a pleasure to be on here.
So when it comes to anything financial, whether it's being in the banking industry or tax preparation, more times than not, it seems like people kind of find their way into these professions accidentally. How did you find your way into this exciting world?
I've never been asked that question the same way. And it's really interesting kind of the background that you had in it, that people oftentimes, especially in tax or accounting, okay, things that some people would consider boring. It's never there's no 5-year-old that says, I want to be an accountant, right?
Right.
So I love how you said it. It's always kind of an accident. I used to be an accountant many years ago, a full-time accountant in property management. And the joke around there was, how do you get into property management? It's just one of these things where it's kind of like, huh. So that's a great question. I mean, ultimately, I needed a job. I came here and we were an immigrant family, and both of my parents were in the sciences. And I really just didn't have any guidance. And I had a good friend of mine that was majoring in accounting, and she said, hey, you should do accounting. You always have a job. And I said, huh, that makes sense. And it was as simple as that. I changed my major because I was kind of not really sure what I was going to do. And I was already working as a part-time accountant in the days. I was going to school, university in the evenings, and it just made sense. But yeah, most of the time it's kind of an accident or a fluke.
Well, it sounds like that person provided some logic and a direction and you ran with it. Have you always found your way you do that type of thing, or did it take some thought before you dived in?
Well, there were some periods of kicking and screaming, Jack. There were a couple times where I wasn't sure I was in the right field, and then I took other turns with it. So I wanted to go from more the back office accounting side to more front office, maybe investment banking, maybe sales, maybe investments. And every one of my attempts, it was kind of like a sign. You need to stay in accounting. This is what you're good at. Continue to develop your skills, continue to do better and better. And there was one point where, after trying another industry and just hitting brick walls, where I ended up back in an accounting job, and the firm there said, oh, by the way, we'll pay for your master's degree. And even then I was kicking and screaming and wanted to go for a master's in something else. None of those schools were really interested in me. The ones that were interested in accounting. So there was one point where I said, you know what, this is what I'm doing, and that's it. And my whole life essentially has been in accounting.
I'd be curious then, you do have a bit of a real estate portfolio for yourself. So how did that come into the picture?
That's a great question. So what do accountants look at? Numbers and what does logically make sense. Real estate logically makes sense. As soon as I started earning enough money to where I had what one would call discretionary income, instead of spending it, immediately started looking at what are the least expensive units that I can get into to start generating passive income. And immediately started looking at condos. And I'd say from my very first year working for myself, I started investing in real estate. So now I have both commercial and residential, and real estate makes a lot of sense from an accounting standpoint. You have tax breaks like cost segregation studies that can be used. You have your regular depreciation deductions. You have ways to defer tax, such as 1031 exchanges. And then there are other more complicated strategies under each one of these, as well as others completely that might be a whole podcast in and of itself that apply to real estate. So as an accounting professional, real estate is kind of a no-brainer in terms of where I'm going to invest my money, in terms of how I'm going to put together a portfolio of passive income for myself. And at this point, although I have a balanced portfolio of equities and other things, real estate plays a very major part in my strategy for my own personal finances. So it's something that not only do we guide clients on and that we recommend for clients, but interestingly, a few members of my senior team at my company also own rental properties. And if you think to yourself, if a CPA or an IRS enrolled agent are investing in real estate, that tells you something about the financial, how much it makes sense financially.
I think it's always interesting. You talk about financial planners, tax preparers, accountants. They see these transactions on a regular basis. They work with these numbers all the time. And it just doesn't seem like a lot of them do what their most successful clients are doing. Does that make sense?
There is an element of tastes and preferences. I have some clients that are very smart clients, Jack, that just aren't interested in real estate as an asset class. It's just something that's not interesting for them. And I have seen also a lot of people that are very risk averse also don't go into other types of businesses. Some people have one job, and in a sense, they may not. Another thing is, they might be a very risk averse personality that might not want to step into other things that they haven't been doing themselves. So the type of person that takes a job as an accountant a lot of times is very conservative. And that might be
Mm.
part of it. For me, it's the most logical thing.
Yeah. When you say conservative outside of gold, I'm not sure how much more conservative you can be other than real estate.
There are some aspects to it that people consider risky. There's the property management aspect to it. Many
Sure.
people are in, because remember, I'm speaking to clients all day, every day, 7 days a week. And some clients will say, well, real estate sounds interesting to me, but I don't think I want to deal with the people portion and the property management portion. One of the first challenges that I had once I had a portfolio of 4 or 5 properties, first challenges I had finding a reliable handyman maintenance person that isn't going to charge an arm and a leg. And these are real challenges that many people just, it starts to get outside of their comfort zone. There might be entrepreneurial in one thing, selling investments or helping people with tax strategy, but they might not be entrepreneurial when it comes to that. This is very roll up your sleeves kind of work, real estate.
Mhm.
So I do hear that from people all the time. I don't want to be involved because I don't want to be worried about vacancies. I don't know how to find tenants, and I don't know how to manage the property. So I think that's a hang up that people have.
Sure. What are some of the most common tax challenges you see real estate investors facing today?
I'd say from a tax challenge standpoint, first of all, many clients that we have and prospective clients really don't think about taxes very proactively. We have this issue where people approach us around tax season time. And at that point, we say, here's how much you owe. A lot of times, real estate investors, it's not their only line of business. Many real estate investors also own some other type of business. And we're in a situation where it's the end of the year. There are things that they could have done now, right now in July, in the summer months, that would have made a substantial impact on their year-end tax obligation, and it wasn't done. And this is something that I've spent so much time thinking about, Jack. Many times people don't want to think about tax because it's the most uninteresting thing for many people. People are interested in business. People are interested in growing their real estate portfolio. They're interested in making more money. They're interested in trading and being successful trading. But accounting is this back office thing, and tax is this back office thing that people avoid. So what happens is we're approached all the time in February and March, and Jack, the person on the phone says, hey, I need some help with the short-term rental cost segregation, Schedule C tax deduction against my W-2 income strategy. And I said,
Mhm.
where was this strategy in June and July when we have time to set this up for you and make sure that you have it all right? Because what happens is people will see a TikTok video or YouTube video or stumble upon a podcast, such as some of the episodes that you have on your show, and they'll stumble upon it right during tax season. And by then, the ship has sailed for a lot of these things to be done. A cost segregation study, you have to do it in a timely manner. It's not going to be something that you do on a rush in April before filing. So I'd say the biggest stumbling block for people in taxes, specifically for people in real estate, okay, is not having a plan far in advance. And one reason that I've thought about why it might happen has to do with the upfront cost of hiring a professional to set this up for you, either a tax attorney or a CPA or an EA. And I've noticed people don't want to spend the money, but then the tax deduction can be 10 or 100 fold of the money spent. So I've been thinking about this over the last few weeks. How do we reach out to our clients in a way that say, look, we're not looking to charge you for services that aren't going to multiply 100-fold in terms of their tax benefit to you? I think that's something that I've been thinking about lately, but it's a great question that you had. I think that's the biggest stumbling block.
Yeah. One of the things that I think is really interesting is that unfortunately, a lot of the people that I've worked with regarding accounting or taxes and financial advisors, more times than not, they never are there to be a team member and kind of guide me with some of this stuff. And it is reliant on me to come across things. And then I'm the one bringing it to them. Like it's always like our interests aren't aligned or something. I don't know how else to describe it.
I can tell you exactly what it is. I'll give you an inside scoop on the tax and accounting industry, specifically when it comes for planning for people in real estate. I've heard accountants say this. I can make X amount of money during tax season and not work the rest of the year.
Hmm.
So the mind frame with a lot of small CPA firms and even mid-sized ones is, why am I going to do any kind of additional work the rest of the year when I really only have one season that's going to cover my bills for the whole rest of the year? And I think the reason why we're really different for this is because I found that a lot of my clients want a lot more than just somebody to file their returns correctly. Filing returns correctly is a skill that's important and it's difficult. But the real value in finding an accountant outside of just making sure you're in compliance is making sure you have that strategy. And this is something that I'd say about 6-7 years ago, I started pushing out to all my clients. If I know somebody has a Schedule E on their tax return, meaning they have a rental property, or a Schedule C for a short-term rental, I specifically reach out to them, handwritten, have my assistant, I need you to email Mr. XYZ specifically with this strategy, and I want this family to know that this is something that they can take advantage of. And it's because this is also, from a selfish standpoint, think of what kind of client retention it would have if you, Jack, are finding tax strategies by yourself and having to bring them to your accountant versus your accountant proactively saying, hey, if you need tax planning, now's the time. And by the way, here's a couple things that we think you can take advantage of. Think about how much loyalty you'd have to that accountant for somebody that
Right.
is doing their best at taking time. We're working essentially for free a lot of times, finding strategies for people, sending them to them and saying, implement this by yourself. You don't even pay me to implement this for you. If you want, you can hire me to implement it for you, but you don't have to. That's one of my primary goals with our client communications and outreach is educating. We want our clients to be educated. Okay. And then that really helps during tax season, because during tax season, if there's an issue, a lot of times they know exactly what kind of was
Right.
ahead of time.
Well, that's a very go-giver mentality. I don't know if you've ever read that book, but it's give, give, give. And eventually you're going to find that reciprocation, if you will. A lot of small business owners even, we consume all of this material, but we don't have the time, the patience, the bandwidth to implement to the level that it actually needs to. And we got to start to see this as lost opportunity and lost revenue when we don't get somebody like you involved.
Yeah, I think so. I've been reading a book called Confessions of the Pricing Man. And It's a gentleman that wrote the book that for 30 years ran a company that consults on massive corporations and even smaller ones on pricing. There are so many psychological tests that have to do with when somebody's going to want to go with a product or service. When somebody is approaching us for a tax strategy, they might see the price tag and say, well, this is an expense, because they're not feeling the immediate pain of this loss that's happening every single day that they don't have this strategy. So there's some psychology behind that. I think that with a lot of our clients have been taking advantage of this. So, we've been able to really kind of make sure our clients know about different things that they can do. But I think that there is a little bit of a wall that needs to be crossed. But that's a good point you brought up. I agree with you.
Well, if you're in real estate investing, especially a small business owner, I'm going to direct everybody to your website again. So head over to dimovtax.com. That's going to be a clickable link in the show notes. Take advantage of some of the resources and information there. And if you found some value in what we're talking about so far, this show only grows if you share it with one of your investor friends. So please consider doing that. And if you're watching us on YouTube, give us a like and subscribe. So I was hoping we could spend a little time on the concept of, it seems like a lot of real estate investors get into this and they don't see themselves, they see this as a side hustle or a hobby instead of it being a small business. So let's talk about the three essential tax strategies that small business owners should be aware of, that maybe they're being underutilized, and maybe real estate investing is one of those things.
I'd say the biggest one that I see is this aversion to taking advantage of allowing you to deduct. At this point, I believe it might be up to 70,000. I'd have to check, but 60, $70,000 towards your self-directed 401k or SEP IRA. And I see successful business owners, whether they're in real estate property management, construction, development, and Airbnbs, and have the scaled Airbnb empire. And I see people that are earning hundreds of thousands of dollars, in some cases millions, and they're not really taking advantage of just some of your main basic things. So I'd say, first of all, make sure that you're maxing out whatever retirement plan options there are. And this is for people that have excess money and that are saving money anyway. Make sure to do that. And this falls outside of real estate. But if somebody is already successful and has a diversified portfolio or wants to have one, it's a great way to take a nice chunk deduction. Okay. Another thing that I see that's massive for small businesses is always evaluate what is the proper structure for your business. And this isn't always just make sure that you're an S Corp conversation. Okay. For real estate, you might want to be a single member LLC for some of the investments. You might want to be in a partnership with a spouse. You might want to be in an S Corp. There's many different structures out there. But the important thing is make sure that you know what your business structure is and make sure that you know why you've chosen that. And there's a major asterisk here. I hear general kind of things, not only on podcasts, but kind of on Instagram Reels or on TikTok or X, formerly Twitter, and all kinds of places where people really promote one structure. They'll say you should be a C Corp because of this. And a C Corp has many advantages. One of them is $10 million deduction for capital gains if you're considered a qualified small business. Huge deduction. Okay. And then there's other pros for a C Corp, such as if you're going to be getting investors and you're going to be going public or looking for angel funding, regardless of what it is. It could be a real estate related startups, which we've seen before with over 1,000 Airbnbs. You could be a C Corp where you're raising money through angel investors. You need to be Delaware. But then on the other hand, I've seen ones where it's much better to be an S Corp. So you always want to have the answer, which one is better? And then here's the part that nobody talks about on any social media. What state are you located in? And what state are the primary operations of the business? Because although some states, an S Corp is a no-brainer for certain business structures, there are other states that tag an additional tax. I'll give you a great example. New York City, 8.85% additional tax for S Corps. At which point one has to sit and calculate, does it even make sense for me to restructure my business? What are going to be the pros and cons? So if you don't know why you're in the structure that you have, and you just have it because somebody said you should be an LLC, I'd say go back, meet with your accountant, put together strategy, But I'd say that's a big miss too, is the business structure and type.
And it's kind of interesting because I've had Garrett Sutton on the podcast in the past, and making sure there's a balancing act there, because you want the legal protection regarding that type of structure, but you also have to take into account the tax. And we never talk about the balancing act there.
Yeah, I mean, and there's other balancing acts that need to be done too. One important one is tax strategy savings versus possible audit risk. There's a balance. A couple of years ago, the IRS really made their rules much more stringent on how people are going to deduct cost segregation studies and what exact type of engineering report is required. And then one can say, oh, I can go with kind of a more inexpensive or economical service to generate this report, but will it hold up in an audit? We have to make these kind of risk decisions all the time. And then there's people that are straddling a fence. They'll say, if I were to be audited, can I really prove that I qualify, for instance, as a real estate professional? Because the deductions for a real estate professional are massive. Okay. But if somebody has a full-time job or an occupation, they have to modify that strategy. You'd have to try to go short-term rental. You'd have to make sure that you can prove you're the one putting in the most amount of time so you can take this deduction. So a big one that came out 2 years ago was this whole concept of, if you own a property, but you have a full-time job and you want to take a deduction for the property, then the only real way the IRS would allow it is if you make the property a short-term rental, meaning average stay is less than 7 days, and you put in at least 100 hours a year into operating the rental property, and nobody else is spending more time on it than you are. Okay, then the IRS will allow you to take that deduction against your W-2 income, which could be substantial with a cost segregation study. And this is something that became really popular over social media a couple of years ago. We started getting many, many requests for this. A lot of times people, some parts of this, they had implemented correctly, other parts not. And there's a lot of confusion out there. I'd say if anybody, my advice for anybody, if you see a tax strategy on social media, make sure to spot check it with your accountant. And if you don't like the accountant's answer, don't be mad at the accountant. Sometimes what you hear on social media may not actually be accurate. So make sure to spot check it, maybe with one or two accountants if you don't trust the first one, or find somebody that specifically specializes in real estate. At our firm, we specialize in real estate. I would suggest make sure when you reach out to us, say, please schedule me with somebody that specifically has quite a bit of experience in real estate. This is who I want to speak with, and we'll make sure we get you with the right advisor on the team. We have a dozen or so. This is something that we look at every day. And I suggest everybody look at it. Even if you don't hire us, make sure to hire somebody to at least spot check the strategy.
Color me shocked that we shouldn't just trust everything we see on social media.
Oh, I see things all the time that are an instant audit.
Yeah. Well, it's one of those things, like, between the bombardment of supposed people who are presenting themselves as experts on social media and people copying, pasting results from AI. I mean, it's just a constant, what do you trust on these platforms?
You know, one thing that I found is really kind of an eye opener is most people that are posting things on social media that have to do with tax are not actually a licensed professional in that field. And so my recommendation is when anybody is interviewing for an accountant, make sure that it's somebody that holds the appropriate license, but also make sure that they have experience in whatever specific goal you have. Because, for instance, real estate is very, very specific. And then there's a way that it becomes even more specific, Jack. Real estate, when people are thinking about this multi-generationally, okay, if it's somebody that's thinking about real estate from a perspective of wealth preservation, not only for myself, but also my family, my children, my spouse, there's another world of real estate planning that falls far outside of the scope of anything you see on social media that has to do with estates and trusts and strategies having to do with that. So I think that that's a really good point is what's the level of expertise that you see on social media and where can it go? And you'll never see the estate and trust one because somebody can fake it if they're not a licensed professional. They can talk about cost segregation, 1031 exchanges, using mortgages or taking out loans to buy other properties and creating an empire. almost anybody can talk about that without any kind of certificate. But once you're getting into estates and trusts and things of that nature, that's where you really want to get some advice.
Well, as a business owner, let's learn from your owning a business, an active practice here. What has been your biggest mistake and what did you learn from it?
I'd say from strictly a business, yeah, so many mistakes come to mind, Jack. So many mistakes. I mean, I think part of being a business owner involves being able to beat myself up a lot because in order to really serve the clients, I have to think from the most self-critical possible viewpoint. And I think that there's been probably in an effort to please the clients to get returns done quickly, we've in some cases created some clients that said, well, this felt too transactional. And I'd say currently one thing that I'm working on as a company is making sure that although most of my team is very conversational, there's one issue that happens with accountants. Accountants by personality are very introverted people. Generally, what kind of personality takes an accounting job? It's usually a very introverted person or a quieter person, more studious person, and not your most in your face talking person. The in your face talking person is going to become your insurance agent or your salesperson at the car dealership or person selling a product or a service that's working events, that's on stage. But an accountant typically isn't. And then the client approaches us. And what does the client value? The client values presentation and having somebody that's communicative. But by definition, field of accounting attracts the exact kind of person that are not what the client would most want. So I'd say the biggest mistake is that I could think of specifically for my business is making sure that not only are we training our team, and at this point, our retention rate is great. Most of my staff have been with me for years. Not only training them on the hard skills of is the return right, but can this be communicated? And this really is applicable for tax planning. And Jack, people approach us all the time. They say, I'm about to do a 1031 exchange, and a portion of it is going to be considered capital gains because the replacement property doesn't meet the full fair market value or whatever the case may be. I'm just giving an example. I need somebody to compute this for me so I know how much tax to set aside. And we'll get somebody and they'll just send the numbers. And I always say, don't just send the numbers. Explain exactly how this works in the email. Offer a call to go over it face to face or with even screen share and show the spreadsheet of how you came up with it. I'd say focusing on hard skills in quick client service is one thing, but also slowing down and spending time with each client is another. And both of them have a value. Everything in life requires balance. And this is one of the in cases where I've been so concerned in making sure clients get things turned around quickly. I didn't spend enough time making sure that my staff have those soft skills to be able to pick up the phone and just have a conversation, not even about the return, not even about the tax projection.
You know, before you and I hit record, we were talking about the use of AI and automation and a few things. What I think is really important and what I've been saying for a long time is that I'm seeing a lot of people who will default to AI, just copy and paste and do that type of thing. But what I want everybody to realize is that we need to be leveraging these new tools and strategies to make us a bit more superhuman, if you will, free up our time, give us the resources so that we can leverage our humanity, our communication, and being able to provide that level of touch and care. And that's where we're going to start to stand out. That's how we leverage these new tools and technology to give us to stand out into that level of customer service that you just outlined.
Yeah. It's something that I've communicated to my team before. I've told them maybe 5, 10 years, these forms that we're filling out, you're going to be replaced by AI. And what's the last thing that's not going to be replaced by AI is the relationship, getting that person on the phone. There's some people that are maybe smarter than I am that have figured this out before. TurboTax, maybe 2 years ago, really started in their advertising, and you might have seen this already, where they say live support, live support, live support. Why is it that right around the age of automation and kind of people being fed up with everything being completely humanless, start really promoting this in a way going the opposite direction? They didn't say TurboTax didn't start running advertising campaigns 2 years ago saying you're going to get your free AI bot. No. Instead, they went the exact opposite direction. They said you get unlimited support from an expert. So you see what I'm referring to? It's exactly what you just said. It's in client services or in anything in life, the main value is now even more focused on that human to human interaction because we've had so much AI kind of get into other parts of the business. And this is one of the exact same things that I was talking about a little bit earlier, highlighting that with employees, how important that is that we're building on the relationship rather than on just the data.
Well, George, this has been a fantastic conversation. Before we start closing things out, is there anything we should have hit on?
Well, I'd love to know a little bit about you and kind of your take on. I mean, I don't want to put you on the spot if you have not much to say about it, but I'd love to hear a little bit of your take on how overall financial strategy has helped you in your own career and business and everything.
Yeah, this has been one of those things that it's my perspective has changed drastically over the last couple even decades because, and it's kind of this rubber band. It's kind of that swings from, when I was a W-2 full time in a cubicle, I did the whole worker bee thing. Everything went into 401k and you set it and forget it. And then as you start to add real estate, you start to question how this money is being leveraged and why aren't I seeing it grow to the level that I would expect and hope. So then you start to change things around because you think you're going to do it better. And then you start now, as I've gotten older and hopefully a little wiser, you start to leverage experts such as yourself and trying to find again that balancing act of risk and reward. And you're trying to plan for the next 10, maybe 20 years. So I would just tell people that it would be best to just try to help find people like such as George and will help you find that balance now versus down the road. I feel like I'm in this catch up period, just like you mentioned earlier, when people come to you at tax season trying to cram in these last minute strategies. Don't do what I'm doing and trying to cram in these last minute strategies later in life.
It's never too late.
True that. Well, George, if you're ready, we'll dive into the rapid fire and close out this episode. But again, dimovtax.com. That's going to be a clickable link in the show notes. But are you ready for some rapid fire?
Yeah, let's do it.
What lie do real estate investors often tell themselves?
I'd say sometimes people purchase an asset because they really are in love with the idea or the area or the property itself, and the purchase is emotional, where they have kind of rosy expectations as to how much revenue they'll receive from it. And it doesn't really quite work out that way in some cases. Sometimes people take loans at unfavorable terms, hoping that they can refinance later or that something else will happen. I've seen through running a tax practice and speaking with literally thousands of people over my career about their tax and financial situation. I've seen it many times where people are in an unprofitable situation because they either didn't do the due diligence or they kind of had rosy expectations. So I'd say one of the biggest lies I see is no matter what, this real estate property will appreciate. It might appreciate, but during that time, there may be other things that could be generating a better rate of return for yourself. So I always say, please examine a few different situations. And especially if you're going into real estate, make sure to do your own research. Sometimes there's a conflict of interest with the broker. And I'd say, make sure to take a look at a few different markets. Don't look at just one market, get to know a few and make sure that it's one that you really know the area.
If you could go back in time and give your younger self a piece of advice, what would it be?
I'd say right from the start, from high school, focus in on accounting. And the main portion of that has to do with real estate investing in the sense of taking out loans. I'm sure you hear it all the time on your podcast and friends or other investors. I should have taken out more loans against my property when interest rates were lower. I'd say that's my number one biggest mistake.
Do you have a book recommendation?
I would say for anybody who's a small business owner or who's growing a company that is scaling or that's growing, take a look at Scaling Up by Vern Harnish. One of the things that it really hammers is constant, I wouldn't say constant communication, but daily communication with your team, because that's kind of falls into a bucket of mistakes is having operations where you have a few different departments not talking to each other. Think about how much better everybody works when there's daily meetings. So I'd say, especially if you're a business owner that is in the process of growing your company, take a look at Scaling Up by Vern Harnish.
And what single process or tool have you implemented that has had the biggest time saving impact?
Oof, this is going to sound crazy, but I'd say Text Expander. Text Expander. For somebody who is working at a job that requires a lot of repetition, use an efficiency tool like Text Expander. It will make your emails much, much faster, especially if there's whole sections that you have to send. For instance, let's say that you're in the insurance industry and there's a paragraph that you have to send in every email or slightly modify. Take a look at tools like Text Expander. It can make that extremely quick for you. And I'd say for probably 5 or 6 years when I was hands-on working all day, all night on client work directly, that's probably my biggest time-saving tool in that phase of my business.
Well, I can't agree enough. In fact, I used a version of Text Expander in Alfred or Raycast. Some of those tools have that built in now, and it's invaluable. I have just all of these snippets with 3 characters. It types it all out because it's a repetitive thing. So yeah, I use that type of thing a lot. In fact, it drives people a little crazy if they sit at my computer because I don't even have my menu or anything on my screen. Typically on a Mac, you see the dock at the bottom. Everything is keyboard shortcuts. So when I launch an app, anything, I go to my keyboard, not to a menu. But I guess maybe I'm an oddball.
I prefer it too. I use the command space to open up applications. Never look for applications in the
Yeah,
folder.
that's same here. Well, George, this has just been fantastic. Again, it's dimovtax.com. Going to be a clickable link in the show notes, but really appreciate your time. It was great meeting you.
Thank you so much.